What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market it looks like the market is setting up for bear trap round 5 as we see extremely low volume selling going into CPI data and SPY officially has the full bull trend. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today was extremely low volume and we did gain the full bull trend, which you can clearly see that SPY now has the full bull trend with all of the moving averages crossed over to the bull side, and the price action is just barely down below the 5 EMA. So we also do have bullish price action, and it still looks like we're just consolidating in a bull flag before the CPI data. And as you can tell, we went down on extremely low volume, so there is absolutely no selling pressure behind today's downtick, and we only dropped 0.4%. So while we have the full bull trend and we have bullish price action and we see extremely low volume selling, it is more than likely while we are in the bull trend that these are going to be bear traps. And if you've been following along, we have called successfully the last 4 bear traps. So even though this does not guarantee this bear trap will be successful, it does look like the chart is screaming in our faces that CPI data was a bear trap, and we are going to see the last official short squeeze of this rally, which could take SPY to 421 and possibly even all the way up to the 430s. So the bear is waiting up there at 421, but the bulls are now going to be coming full speed at that bear with a lot of shorts to squeeze through resistance. So do not be surprised if SPY does exceed that price target at 421, but I still do expect to see bears trying to show up at that level. So just keep in mind today was a very low volume selling day, so there is no way I'm putting any weight behind the price action. Even though we did slightly close below the support trend line, there was just no selling pressure that puts any weight on that move, and I am still bullish as long as we are above SPY 408. And then if we break 408, I will instantly get more risk off, because we will likely come down to retest about 399 to 400. So just keep in mind, there is no way that if you are managing risk, if the bear market returns, that you are going to lose a lot of money, because as soon as SPY breaks down below 408, you can instantly liquidate your positions and just sit in cash, and you will barely lose any money if you are properly managing risk. I see there's so many people that just think the bear market is going to return and SPY is going to $0 overnight, and you're going to get this magical rug pull straight out of a full bull trend with bullish price action and lose all of your money overnight. And it just does not work like that. So use some common sense when you're trading and manage your risk at proper support levels and follow the direction of the trend. And so far we still have the bull trend and we still have price action above all the support. There's so many comments about bearish divergences and being overbought, and none of that matters. All that matters is price. It's a bearish divergence until we slice right through to new highs and we erase the bearish divergence. So if that's the only reason you're shorting this market, you are going to learn a very valuable lesson about why price action is king. So there is a very good chance, looking at this chart, that tomorrow's CPI data will lead to the short squeeze that sends SPY back above 416 into our price target at 421. So that is what I'm expecting, and I will instantly get more risk off if we break down below 408. On the NASDAQ 100 triple Qs, we were down 1.13% today, and again it was on extremely low volume, so we continue to see these bear traps of these very light volume sell-offs down to support, which is really just the bulls taking a break and cooling down before they get ready for that next leg higher. And the next leg higher in the triple Qs could take us all the way up to about 338 or the 200 simple moving average. So there is a lot more room to the upside, but it will require the bull breakout above the very critical resistance at 324. So triple Q's risk level is down here at 314, so you should be staying bullish above that critical risk level. And then the next bull breakout and short squeeze will come on the break above 324, which could send the triple Qs into the 330s. Now, if we break down below triple Q's levels of 314, it's instantly more risk off for the critical retest of 307 and the 50 EMA right around 305. So just get a lot more risk off if we do lose support, and then you can start getting more patient for a re-entry in a long position, or even start shorting the market if we lose the bull trend. But there's just no way that it's time to be bearish while we have full bull trends in all of the indices on low volume selling right back down to critical support. We want to buy at support and bull trends, and we want to sell at resistance, and we want to just go with whatever the chart is telling us. And we don't want to use any biases, because right now the chart is saying bullish, so there's no reason to be looking for short entries while we have such a strong bull trend. On the Dow Jones, we were down 0.16%, and again, we were going down on lower volume, and we are still full bull in the Dow Jones because we did gain the full bull trend, and the price action is still above all the moving averages, and you can clearly see the price action is still closing above the pennant breakout. So this bull flag breakout could send the Dow Jones up to 333 and then 337, and your critical risk level is down here at 324, and below 324 look for a retest of about 320 to 321. So we're staying bullish as long as we're above critical support with the full bull trends, because there is no reason to get bearish while we are in a bull trend. On the Russell 2000 IWM ETF, we were down 1.36%, and we did close the gap below, so we are seeing a retest of the breakout. And if this is successful, we should see IWM bouncing off of 190 and breaking back above 193, and that should be our clear trip back up to $200. If at any point we lose this support zone right around 189, just be a lot more risk off for the retest of 182.5, which is also going to be critical support. You can see we have the full bull trend and the full bull price action. So on a confirmation of a break back above 191, we will likely make that next leg higher. On the ARKK ETF, we were down 5.45%, and we did leave a gap open just above right around $50, and we did close below support at 49, but the critical support we need to stay above to stay bullish is down here at 47, so instantly get more risk off in ARKK if we break down below 47. We're getting more bullish above 49 and bearish below 47 because we still do have a full bull trend. We do not want to get bearish until we lose that critical support. So follow the price action at those critical levels. And if we break down below 47, there will be one final test of critical support just below at 46. On the VIX, we were up 2.26% as we did see the VIX spike a little bit today, but overall we still have the bearish price action and the bear trend in the VIX. And I still expect to see the VIX trending down towards 20 before the bears start stepping back in. On Bitcoin, we're currently down about 3% with Bitcoin retesting that critical support at 23,000, and we need to hold above this level to form the next higher low, and we are getting what could be a double top look right around 24,000 if we do break down below the neckline at 22,600. So for that reason, we need to get a lot more risk off below 22,000, and we can get a lot more bullish above 24,000, and above 24,000 we should start running up to the price target at 28,000. Continuing with the big tech hot stock series is that we do have Amazon stock breaking down below that critical support at 138 today. But as you can tell, the next test of support at 134 has not yet been tested. So that critical resistance up there at 144 did play out, and we did see sellers stepping in at that level, which is completely expected because that was a very critical resistance. So you will not want to get bullish while we are below 138. Wait for the break back above that level. And do keep in mind there's still very strong resistance at 144. And if that level does break, you're looking for a test of the next resistance at 152. If we break down below 136, look for that critical support at 134, and below 134, we are getting risk off because we could be coming all the way back down to about 126, all the way down to about 123 to fully close that gap below. So we can't get bearish while we're above 134, but we can definitely get a lot more risk off while we are below 138 for at least a retest of 134 before we go any higher. On Microsoft stock, we were up 0.71%, and Microsoft is going to be full bull as of tomorrow because that 20 simple moving average will cross back over the 50 EMA, and we do have price action above all of our moving averages. The next bull breakout in Microsoft will be the break above about 283.6 with upside price targets at 290 and the gap fill at 296. And downside critical support will be right around 277 and 274, and below 274 look for a retest of 269. As you can tell, Microsoft is going up on increasing volume, so it is still looking extremely bullish. On Nvidia stock, we were down nearly 4% today, with Nvidia closing back down below all the moving averages and in jeopardy of losing the bull trend, but we are going to have a very critical support test at 165 and then 161, and if we lose all of that support, you're looking for the gap fill at 157. Below 157, this is going to look extremely bearish, but there is still the possibility this is a higher low as long as we're above 165. So just get more risk off until we can break back over the 50 EMA at 176 because we still do have a gap to fill to the upside just below 187. Also keep in mind there will be resistance right around 180.5, so watch that level as well. On Tesla stock, we were down 2.44%, and we did test that downside support level at 839, and we did start to get a bounce off that level. but so far this is still higher volume selling and this is still a falling knife. So while you could have made profits off of 839, there is no guarantee that we're not coming down a little bit lower to test that support right around 820 to about 831. Now, if we do get a positive bounce off 839 and break back above 864, that will be extremely bullish, which means Tesla could start making that next leg higher towards 970, but we will want to wait for that confirmation and breakout from support and above resistance. On Apple stock, we were basically going absolutely nowhere today, but we still have the full bull price action and the full bull trend. So the next bullish price target will be 174 on the breakout above 166, with downside critical support at 163 and 157. If we break down below 163, we also have support at 159, but it is very likely that we will close that gap if we do start to trend lower. So just be aware that you can still buy the dip in Apple at 157, but if we lose that critical support, you will want to be a lot more cautious of a possible correction. On the financials, we were up about 0.5% today, and we are very close to gaining the bull trend, and we do have very bullish price action, so the financials are looking strong at this time. The industrials were down 0.36% today, but we still have the bullish price action, and we're very close to having the full bull trend, so the industrials could continue to go higher from here. The healthcare sector was down 0.3%, closing back down on top of support, and we still do have the full bull trend. So it does look like this consolidation in the healthcare sector is going to resolve in a breakout in the very near future, and the bulls do have the advantage with the trend. The energy sector was up 1.76%, failing to close above the 50 EMA, so that's still possible. This is a lower high before the next leg lower down to close the gap at 69. So jumping back over to the S&P 500, do not rule out the possibility that this is all just a bear trap on low volume selling back down to support, and we did gain the full bull trend, so the bulls do have advantage of the trend now, which is going to mean they are going to buy the dip at critical support levels. So have a trade plan that is built around trading in the direction of the trend, and if you are shorting this market, you need to have very tight risk management because there is not a lot of downside reward in a bull market, so you need to take your profits quickly and you need to get out if we break through resistance because that is going to trigger the short squeeze. So based on the chart, I'm expecting to see a short squeeze rally in the very near future because we do have the bull trend and we still have extremely high bearish retail sentiment. Remember that the majority of retailers are usually wrong, and just because they're screaming the loudest does not mean you should join their side of the trade. Follow what the chart is telling you and manage your risk around critical support levels. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.